This company, Nvidia, raked in a whopping $1.3 billion using AI, and that's twice what they were making before. Even IBM's rocketed by 19.0%, hitting $2.58 billion in 2018 with artificial intelligence from scratch. Big giant Intel isn't far behind also, rolling on $12.9 billion in revenue thanks to AI growth. Did you notice there's not only fancy AI software making waves, but the tiny hardware chips are also leveling up big time. Thus, if you're into this AI stock shares, there are a ton of updates you'll want to catch up on. First, let's talk about the ARM IPO. When ARM's shares hit the NASDAQ stock exchange for the biggest IPO of the year, it was a huge hit. Be it the billionaire tech bigwigs, CEOs, or whosoever, they were all hooked to the screen as if it was the biggest showtime in the stock market, and it was really one for the record books. If ARM stock went down, it could have stopped other companies from going public, but if it did well, it could have made it easier for more companies to go public. And that's exactly what happened on the 14th of September 2023. ARM's shares burst onto the scene at $56.10, a cool 10% higher than its initial offering price of $51. But that was just the beginning of this roller coaster ride. The shares didn't stop there. They kept soaring a jaw-dropping 25% by the closing bell, settling at $63.59. This made ARM's fully diluted valuation a staggering $67.9 billion. As of now, ARM has a substantial valuation of $54.5 billion, having chosen to dance at the top end of its IPO range. But that number is by no means fixed, depending on how much love the market shows for its shares. Just to give you some perspective, when ARM was valued at $64 billion, it was a prominent player, set to become the most valuable company listed on U.S. markets after November 2021, when the electric vehicle marvel Rivian made its debut with a market cap of $70 billion. But a lot can change in the world of stocks, and today, Rivian's market cap is at around $20 billion. That's the game of living into stocks and shares. That's why it's super important to keep tabs on stock trends. The trading game is a real roller coaster. And guess what? What we just spilled is just a sneak peek. There are way more twists and turns. ARM builds processors, chips, systems, and platforms. But here's the twist. ARM doesn't manufacture. Instead, it takes pride in licensing its advanced technology to some of the industry's giants, including NVIDIA, AMD, and Qualcomm. And let's not forget the tech giants we all know and love, Amazon, Google, and Apple, who rely on ARM's innovative chips to fuel their consumer hardware. Now here's where things get exciting. A whopping 95% of all the world's smartphones rely on ARM-based processors. Think about that. Your trusty mobile device probably has a slice of ARM magic under the hood, but the plot thickens. Apple is a big fan of ARM's magic chips. They've used ARM's secret sauce in almost every product they make, from your pricey iPhone and iPad to your trusty Mac, AirPods, Apple Watch, and even your Apple TV and the upcoming Apple Vision Pro headset. But that's not all. ARM's influence stretches far and wide. The tech giants aren't the only ones joining the ARM party. Big players in the cloud arena like Amazon Web Services, AWS, and Google have also embraced ARM-based processors for their data centers. Do you see the potential ARM is holding in the future? If we zoom out on whether it's profitable to invest in ARM holdings, some investors say a lot depends on whether everyone is bored of AI yet, and that's certainly a thing of the future. The recent price surge from $51 to $63.59 in a day signals strong investor interest. ARM's royalty system is a cash cow, and it's reliable. They expect their chip market to hit $250 billion by 2025 thanks to data centers and automotive chips. But here's the catch. ARM's valuation is sky high, trading at 108 times earnings. To put that in perspective, it's right up there with NVIDIA, but ARM lacks NVIDIA's ambitious growth forecast. One more thing to keep in mind is that SoftBank is the puppet master, holding around 90% of ARM's shares. This calls into question ARM's independence and ability to make decisions that benefit all shareholders. Also, a substantial portion of ARM's royalty income hails from products between 1990 and 2012. Thus, relying heavily on these older products could be a risky bet if demand starts to finish. Now it's your turn to think about whether to make an investment or not. Next up, let's move on to AMD. They're making waves too. Microsoft's tech chief gave AMD's AI products a thumbs up, and their stock soared nearly 5%. Nvidia might have been the AI superstar, but AMD's no slouch. Their shares have seen a solid 60% rise, especially with all the buzz around language models like ChatGPT in 2022. These models need some serious processing power. Nvidia's GPUs have been handling a lot of that heavy lifting, so much so that they're expecting a whopping 170% year-over-year revenue growth this quarter. But AMD's not just chilling. They've got this MI300X chip they're pretty proud of, made especially for AI. However, it was always been seen that AMD is Intel's biggest rivalry, and that's quite the truth. These two have been duking it out in the microprocessor world for over 50 years. While Intel often led the pack, AMD's Ryzen microprocessor in 2017 shook things up, helping them grab nearly 40% of the CPU market by 2021. Now, Intel wasn't just sitting around. They rolled out their 10th and 11th Gen Core processors in 2019 and 2020. Plus, in 2021, they teamed up with big names like Microsoft and launched their 3rd Gen Xeon scalable processors. Meanwhile, AMD's making moves in gaming and even announced a whopping $35 billion deal to buy Links in the same year. But guess what? The tables have turned now. Intel and AMD now teaming up with some big names from FANG to give Nvidia a run for their money. There's a buzz about Nvidia's AI growth. Some say their stock's a steal, while others think it's a tad overpriced, especially with those pricey GPUs. The tech giants, including Meta, Alphabet, and Microsoft, are diving into open source alternatives to give Nvidia some competition. AMD's bringing out their ROCm, made for their AI chips and friendly with platforms like PyTorch. On the other side, Intel's championing their open source AI platform, SICL, and they've got this cool tool, Cyclomatic, for an easy switch from CUDA. AMD showcased their Sienna platform at Hot Chips 2023. It looks pretty cool. And with up to 64 cores and power efficiency, it's perfect for microservers and edge devices. The edge device market is set to explode with self-driving cars, smart AI-powered phones, and advanced game consoles. AMD's embedded segment is on fire, raking in $1.5 billion in revenue last quarter, up 16% year over year. AMD has seen a remarkable turnaround in recent years, with CEO Lisa Su leading the charge with innovative products like Ryzen PC processors and EPYC server chips. They've even snagged some market share from Intel in the PC and server CPU game, but it's not all smooth sailing. Their latest earnings report had some twists and turns, with earnings and sales taking a dip. On the stock front, it's been a bit of a roller coaster, hitting record highs in 2021, but lately, it's been cooling off and trading below the 50-day moving average. So should you invest in AMD right now? Well, it's all about the big picture. Keep your eyes peeled for what's happening in the market before you decide. However, there are 2 green flags that are a must to ponder about. AI is on fire, and it needs mega data centers. AMD's got killer server CPUs and GPUs, scoring a massive 63% revenue jump in data centers. They're eyeing a $42 billion market, all thanks to AI action. AMD rocked a 21% revenue boost in gaming, driven by consoles and data centers, making up 54% of their income. They're expanding into gaming laptops with no signs of slowing down. So, before you decide to invest in these hardware stocks, just give it a second thought and stay ready for mind-boggling surprises. And that's a wrap. It's time to bid farewell, since we have pretty much explained the AI hardware revolutions. If you're a stock investor, keep an eye out on the trends, or else you'll drown in drastic losses. Hit the subscribe button and give us your 2 cents on this video. Catch you on the flip side.